Well, good afternoon. Welcome to this week's edition of Finweek Money Matters, the show that helps you manage your finances. I'm Samantha Loring. Now, coming up on today's show, we'll be taking a look at bank charges and some of the developments we're likely to see from the big four banks in 2013. Plus, we'll discuss how to get into gold and whether it is still a good time to, of course, get exposure to gold and the role it plays in your portfolio. In our management segment, we'll be taking a look at the topic when to pay a dividend. And last but not least, we'll take a look at some tax tips for small businesses. That's all coming up in the next 60 minutes. Of course, you can send us any comments or feedback to moneymatters@abn360.com. In what is arguably the most credible and influential report in the South African bank charges, Finweek unpacked how the big four banks are treating their customers and some of the changes that they're likely to see in terms of product innovation. Now, leading financial journalist Bruce Whitfield and a team of independent researchers investigated this. And to discuss this further, I've got Garth Tennyson, Finweek journalist Bruce Whitfield joining me on the desk, and Joanne Du Plessis, head of pricing at FNB. Welcome to all of you. Bruce, I think I'll kick off with you. This has been something that you've been tracking for some time now.
It's a pet,
progress.
It's a pet project. So 2005, I look at my own bank charges, have a heart attack, recover in hospital after an extensive period of recuperation, and discover that we really need to do something on bank charges. And people before 2005 had tried to do lots of bank charges pieces and were slapped down by the big banks in South Africa, saying, look, you're not qualified, you don't understand, you can't possibly do this. So in 2005, we got Deloitte to do the first ever Finweek, it was then Finance Week's bank charges report. They came out with a report in which FNB and Nedbank came out as the most expensive banks. FNB, through the biggest hissy fit you've ever seen, forced Deloitte to take out full-page adverts in the Sunday newspapers to apologize, which Deloitte did. And surprisingly, the next year, Deloitte didn't carry out the research. So we had to go and find alternative people to do it. Horwath Forensics, a small independent forensics team of two guys who'd come back from the United States, appalled by the level of South African bank charges, agreed to do it for a small fee, of course. So every year, we've got chartered accountants who do this particular research using a particular format that we devised 8 years ago, and says there's a family, it has certain bank accounts, certain banking transactions, and that family has evolved over time. But what we've had is, since 2005, a consistent picture of what's happened to bank charges. And bank charges, like everything else, I suppose, the graph gets all wobbly, goes up and down. But generally, what we've seen over the last 8 years is a steady increase in bank charges until this year. Banks suddenly have got new ideas as to how they should treat their customers, which is great news. It is a breakthrough.
Perhaps, of course, why we've got Joanne here to speak on behalf of FNB, which came out as the bank with the least charges when it comes to individual transactions. I think that was Bruce. So what is your view, firstly, on the accuracy of this report?
Look, I think we're delighted, obviously, to retain the position of being the cheapest within the study over the last couple of years. And I think, the accuracy, we're comfortable, we're satisfied that it has painted a good picture. And I think that the way in which it's been portrayed around how customers have adopted their banking behaviour is
I've got a
good.
bit of a problem with your mic now. I'm going to just throw it over to Garth.
Which is wonderful. I actually tinkered with her microphone just in case she said something horrible about the research.
Or was it ABSA or
well,
one of the other?
Here's an interesting point, because I tweeted a link to this particular story yesterday afternoon, in which I said, here's an extract of my latest bank charges research. And immediately, people's emotional response is, oh, I'm going to switch banks. I'm immediately going to go to FNB. It comes with a health warning. You bank differently to me, to Garth, to Joanne. We all bank differently. What we've done here simply is, over the last year, tracked one single particular profile, tracked the trends. So the trend has been, over the years, that FNB has gradually cut its bank charges, where all of the other banks have steadily gone up. And the trend now is that ABSA, in particular, acting massively aggressively, has gone in and has knocked, and I think this is going to upset Joanne, off the top spot as the cheapest bank when it comes to package options. And look, it depends on how you slice and dice these things. Each one of the banks will argue that if you stand on your head and whistle God Save the Queen backwards in the branch on a particular day of the month, that they can give you the cheapest banking. They will do that. Their press releases will come out over the next couple of days telling me what an idiot I am. I'm used to it. It happens every single year. Ultimately, though, we track trends, and the trends are showing broadly that banks are becoming a lot more aggressive in competing with one another. I'm glad FNB is off the top spot when it comes to the package options, because it shows ABSA, and to a lesser extent Standard Bank, are paying attention.
There we go. So your mic's back up and
It's on
running,
my back.
Jan.
Good.
So let's talk about that. Are you looking to take back that number one spot? What is your goal right now when it comes to bank charges?
Okay, I think, look, it's quite obvious that over the last couple of years, our strategy has been to reduce fees over time, and that, as you pointed out, we've been in that spot for the last 3 years. And I think we will continue to drive our customers to use the most profitable and obviously the most optimal transactional channels in order to transact, and that will most certainly be a strategy that we will continue with.
Because one of the things that's evolved over the last 8 years is the use of technology. 8 years ago, very few people actually had internet bank accounts. The evolution of the internet, now mobile banking, has changed the way in which people transact. If you bank in the way you did in 1993 with FNB today, you are going to pay a huge amount because you're going to write checks, you're going to go to the branch and draw cash, you're not going to use ATMs, you're not going to use the internet. They are going to punish you for using old-fashioned banking techniques. That's been part of the strategy.
Absolutely.
Basically, you use the channels that are cheapest for us to manage, and we'll make it cheaper for you to bank. That's been the strategy.
I suppose,
right,
God,
yeah.
the problem is, people don't have internet, people aren't literate. That excludes a portion of the South African population.
I think another problem, I like to represent the sort of bad cop guy at home looking at this going, FNB may have won, but pretty much the worst of a bad bunch.
The best of a bad bunch.
Or the best of a bad bunch, sorry, excuse me. But the key for me is, and Bruce touched on it earlier, it's how you transact. The problem is walk into a bank, sit across the desk of a consultant and say, right, can you present me a package that will lower my bank charges over the course of a year?
And universally, the question the person across the desk will ask you is, how much do you earn?
How much do you earn? And here's a color-coded package for you. They can't give you much detail on that. And you get home, log onto internet banking, and at the end of the year, you've paid 4,000 or 5,000 rand for the privilege of drawing your own money.
So what are you doing from FNB's perspective right now to address the issue of making sure that those people who interact with customers understand how to sell the right product to them and not sell them a product which potentially is going to be more costly, and help them understand the variety of products available?
Right, so we communicate with our customers on a regular basis. So to address the first part of your question around what are we doing with the people that regularly interact, obviously communication is key. So we undergo some rigorous communication, particularly around our price review time, to try and help them to address customer needs. And
have you seen an improvement on that front? Are you able to measure that?
It's very hard to measure, obviously, unless you interact completely with your customer. But I think just the testimony of how many people are adopting our electronic banking methods, the take-up, for example, of things like our FNB app, people transacting via our online banking profile, and even the mobile banking. We've seen huge take-up in all of those. So I think definitely the message is getting across. And aside from your customer education or your frontline staff member education, we independently communicate with our clients in terms of reducing their bank fees. So if you transact within a branch, we will send you a message and say, avoid this fee in future, rather use this channel or that channel.
I think that's another thing, is the levels of service that you're getting relative to how much you're paying. And generally speaking, in my experience, the banks are not too good on the service front. I think your average middle class South African might be able to stomach paying a couple of grand a year for the privilege of having an overdraft facility, perhaps a home loan, internet banking that works well, a call center that deals with your problems efficiently and quickly. But generally speaking, I think the service levels do not match the fees you're paying, and that's the view of the average consumer.
And I accept, and I'm going to you may fall off your chair at this point, but I'm going to understand where the banks come from a certain perspective. In that there are banks with 10 million customers. You can't have 10 million customers going to the branch and asking a question and expecting a tailor-made product service. You do that in ultra high net worth, private client sort of suites.
Who can afford to pay for that?
Who can then afford to pay for that privilege? But you're not going to get tailor-made banking products. But I would like to see the banking sector to provide product on what I need rather than what I earn. Because it's a vanilla product. You go in, you're sold a package based on what you earn rather than on your transaction needs. If you only do 5 transactions a month, what's the point of buying a bank package that gives you 25 free swipes on your debit card when you might not even have a debit card, for instance?
So there we go. Are you moving towards that? Because I just went onto FNB's website and I looked at, open up a check account with us. And straight away it was, distinguished via your income level.
Sure. And I think that it is kind of what the industry is doing. However, we do have products and options that address that if you do not want the gold account or the platinum account and pay the fees that are associated with that. And of course, I think we need to remember that we cannot just isolate it on price alone. There's a certain level of value that customers are looking for and are prepared to pay for. But we do have products that will address your needs. If you want a no-frills, low-cost account, FNB does offer that, irrespective of your income.
Red rag to bull. Customers are prepared to pay for. Now, customers, unfortunately, in South Africa, got very limited choice. And we've got 4 big banks that offer a universe of products. Yeah, you can go to a Capitec, but then if you want a car loan or a home loan, you've got to go somewhere else for that. And FNB is increasingly making it difficult and is going through a process at the moment where it is testing whether or not it shouldn't be giving home loans to anyone but its own customers. So you're forced then to have an FNB current account if you want an FNB home loan. It's in a test phase at the moment. So we have very little choice in South Africa. So I take an issue with saying what customers are prepared to pay for. It's not what we're prepared to pay for, it's what you're obliged to pay for because there is so little choice.
Can the size of the South African middle class economy support more banking competition? That's quite interesting.
And that's an important one as well. I mean, the Treasury at the moment, Pravin Gordhan, the big call out is for inclusive banking. And banks are under a huge amount of pressure to make sure that somebody who lives on a farm in the middle of the Free State is able to access banking services in a not dissimilar way to somebody who lives in Sandton. So there's huge pressure, and almost Sandton or Claremont or wherever the is, Pinelands banking customers are supporting and almost subsidizing the creation of banking services to poorer South Africans. There is that cross-subsidization. So is it attractive for another big bank to come into South Africa and to compete? I don't think so. The only reason they would come here is because how Barclays came and bought Absa, because they can make lots of money.
Just looking at the international comparison right now, sitting in the holidays, sitting with some people from England, they were shocked that we pay for a bank account in South Africa. So that there's still that international comparison. Yes, there's the different market, and you talked about the fact that in South Africa you've got still a lot smaller market that has to support banks and of course supporting financial inclusion. But are we going to get to a point, are we moving to a point in South Africa where you don't pay for a bank account and you get all the frills, free insurance, free veterinary services or whatever?
Well, hold on a second, a pig just flew by. I'm sorry.
Is that a pipe dream, basically?
I think, it probably would be a pipe dream, and I think we need to consider that our market and our environment is quite different to the UK, which we regularly get compared to, just in terms of our population size, our demographics, the distance that people need to commute to get to places. So obviously we're trying to bring across solutions that help ease that effort required by the customer in order to the traditional coming into town to do your banking. So solutions like e-wallets, that type of thing, we're obviously trying to get into the more remote areas to help with that.
What I still don't understand, I think what most consumers don't understand, is they'll acknowledge South Africa is different to the UK. Why does that mean we have to pay to draw our own money?
Pay to draw our own money?
Yeah, or
to withdraw.
Pay ridiculous fees to have a bank account.
I think it's just also the environment in terms of from a security point of view. Obviously the cost of cash for the South African environment comes at a price because of high insurance, high transport, regular cash heists, just the security that comes around that. But from our perspective, we've obviously tried to alleviate customers having to go into a branch. So we've introduced recently cash at all, and that comes free. We've dropped all fees for those transactions. So you can go along with your grocery shopping on a Saturday morning, and if you need to withdraw money, it's as easy as asking that cashier at that point in time for your cash requirements, and that's free.
Fair enough on cash. It costs money to transport cash. But if I transfer 1,000 Rand on my internet bank account, or 10,000 Rand, or 100,000 Rand on my internet banking account, I'm moving data from one point to another. Right. There is no movement of cash. Yet 100,000 Rand will cost me more than 10,000, will cost me more than 1,000 Rand to move. That is surely a substructure of economic segmentation. You can afford to move 100,000 Rand, you can afford to pay more.
Well, from a transfer point of view, that cost is no different. So online
So why
banking,
does it cost me more to transfer the money?
It won't on FNB's unlimited option. In fact, it's included in your fee, and you pay no extra fees.
Okay, but if I was doing on a pay-as-you-transact basis, you would charge me more to move 100,000. Is it a flat fee at FNB? It is a flat fee. Other banks do then charge.
Yeah, there are some that charge an ad valorem fee, but ours is it's a flat fee.
Well, I'm glad you've acknowledged that and changed it, which is
and of course, as time goes on, and we point out these individual line items that you have to pay for, banks will have to justify it, or it will fall away.
That's what's so much fun about doing this for the last 8 years. People are finally beginning to pay attention. Are we going to see further cuts in banking? Because my sense of it is that we've reached the bottom. There's going to be a little bit of jiggling, a little bit of argy-bargy, and a bit of competition between the big four banks, especially trying to compete for the top spot. But in terms of, we've reached a base?
I think it's hard to say now whether we'd see, but obviously from an F&B perspective, we're always looking to pass on cost savings to clients through, whatever economies of scale we can achieve. So we'll always be looking to assist customers to save on their bank fees, obviously if they transact in a manner that helps us to reach those economies of scale.
One aspect we must talk about before we end this conversation is the role of the regulator. What is your sense as to the impact that the market conduct regulator, which is coming into force this year, will have on banks and bank charges?
I think Bruce is got a business
I have absolutely no idea what impact it's going to have. What I can tell you is historically what impact the interactions with between government, Pravin Gordhan, who has summoned the chief executives to the Reserve Bank, to the Treasury from time to time, and they said, look guys, your bank charges are too high, we need inclusive banking. There was the Jali Commission, which was under the auspices of government in 2000 and something, I forget exactly when. So that pressure, that there's state pressure, there's public pressure, there is media pressure, all of these things have come together in a series of official bank reports which just said, look guys, you make too much money out of your customers, you can't lean on your customers constantly, there's going to be a breaking point, and those pressures I think have been brought to bear. Also the fact that there has been a level of some increased competition where people have looked at market share, where FNB had stolen a march over the last 2 years. ABSA has looked at the reports of the last couple of years and has gone, we need to improve our standing because ultimately we're losing customers. Now it's going to be up to FNB to go up against ABSA and Standard Bank. Nedbank promised us they're going to come back with something in 2013. Let's see whether or not that's going to make a dent in the market. Nothing like a little bit of commercial argy-bargy to bring prices down.
So just if you could in 30 seconds,
Sure.
Are the regulators patting you on the back, or are they saying to you, the pressure's on and you've got to bring it back down a lot more than you have already?
I think there was in August a meeting with the key bank stakeholders, and they have acknowledged that the banks have definitely come a long way in terms of bringing down fees. So I think that alone is saying that they are comfortable that we are taking strides. Obviously not to say there isn't room for improvement. So I think, as I said, a focus for us is always, as long as we have happy customers and we can continue to grow relationships and keep customers and add value at the end of the day.
Thank you so much for joining us today, Jan du Plessis, Head of Pricing at FNB. This week's trade of the week is Capitec. Okay, so Garth, let's box it out here. Your view on Capitec right now?
Well, just a small caveat. I'm not a trader, so we called it trade of the week, but we thought we'd turn it into a small debate.
Or a big fight, really.
Or a big fight. We can always go outside afterwards. Okay. And I've spoken to many a fund manager who has said to me that they will buy as much of Capitec as they can get their hands on. It's just gone from strength to strength. For years and years I've been hearing people saying this can't be sustained, the business model at some point has to start creaking, and it just keeps going up and up and up. So Bruce and I had a bit of a discussion. I think it's that the story that comes out of this bank charges thing is that there isn't enough competition. There's a large pool of people in South Africa that aren't banked. Capitec, over time, has to bring those people into the fold. I'm sure it's going to diversify its products. Long term, I think it's something you'd want to hold on to. Bruce thinks I'm talking absolute nonsense.
No, I buy half the argument, but I just don't see any reason for Capitec to change its business model unless it is forced by regulators to do so. Capitec doesn't make money out of running current accounts for people. It gives people cheap current accounts because that's very good PR. It makes a shed load of money. Most of its profit comes from microlending. You talk to somebody like
very high interest rates.
Huge interest rates. You talk to somebody like Sim Chabalala who has fire coming out of his eyes. And when you say to him, Standard Bank is expensive, Capitec is cheap, he says you've got to look at the total cost of banking. If you've got to get a loan from Standard Bank versus a loan from Capitec, the loan will cost you less. You may pay more for your current account, but overall you're paying less for your fees. This isn't simple. So is Capitec a great pick? Well, Capitec at 2 Rand was incredibly good value 10 years ago. At 50 Rand, people started to think it was expensive. At 100 Rand, it was outrageous. At 150, 150 it was unaffordable, and suddenly at 200 Rand is trading on a multiple of 15 times earnings, which is not much more expensive than the First Rand and Absa and Standard Bank are trading on at the moment. Absa is a bit cheaper. But here you've got a situation where it is cheap on a price earnings multiple basis. How secure is the business model from a regulatory point of view, with government really worried about unsecured lending? I just don't know whether or not they're going to be obliged at some point in the future to cut back on that particular, on the unsecured lending, and then go back into banking products, which is not their area of expertise, Garth.
One of the issues is matching short-term liabilities with long-term liabilities. One way you do that is you offer home loans. As Basel III comes into effect, other banks need to secure corporate debt, and the longer-term debt is obviously something that they'd want to get their hands on. I just certainly think that over time, Capitec will have to diversify its product base, and I'm talking 20-year view. I'm not talking.
20 years.
Well,
You're giving people a long investment.
Exactly.
10, 20-year value investor. If you're a guy who's 30, 20, or even 40, even if you're as old as Bruce.
Sure, I don't know if I'm prepared to wait that long.
It's not a bad place to park some money for a long time and forget about it.
Are you going to get a better return?
We've got to leave it there.
Are you going to get a better return out of Standard Bank or out of Capitec over the next 5 years? Probably Capitec.
Okay, well,
So
there
you
your
agree
views.
with me?
You've laid it out on the table. It seems like we came to some conclusion at the end of that. Bruce Whitfield, financial journalist, thanks for joining us. And of course, Garth Tennyson from Finweek. We're heading into a quick break. When we come back, more Finweek Money Matters. Welcome back. When the US is planning to mint a $1 trillion coin that's being, of course, speculated about, the Japanese stock market is flying as those charged with monetary policy desperately try and introduce inflation that's into their system, and the world is trying to recover from a global financial crisis. One of the key focuses in the investment community at the moment is the role of gold in a portfolio. Now, with a number of new products being brought to the market, Finweek looks at just how investors can get into the gold market. That's without necessarily being exposed to local gold producers. So let's take a look at this. We've got Finweek journalist Garth Tennyson still with us in studio, and Simona Levitt joining us as well from Finweek. Alan Demby, executive chairman of the SA Gold Coin Exchange, joining us at the desk for the conversation. Alan, thanks so much for joining us.
Thank you.
Garth, just very quickly, let's break down the fundamentals of why people who are still bullish on gold think it has further to run.
Well, just that I read something about a guy talking about peak gold. Ore bodies are becoming more and more marginal. It's becoming more and more expensive to mine gold. And at the end of the day, you're sitting with a large global population, and your average person in the street doesn't actually own any physical gold outside of China and India, perhaps. So long term, the supply and demand fundamentals catch up, and gold just continues to rally. That is the theory. There is the other side of the coin that says as the US economy recovers, the dollar strengthens, and because gold is priced in dollars, the gold price falls. However, gold, even though the US has pumped massive amounts of liquidity into the system in an attempt to devalue the dollar hasn't devalued. It's actually strengthened over the last 5 years marginally, and gold has continued to outperform.
Mm-hmm.
So
perhaps that argument really doesn't stand, but what about a low interest rate environment? Because then he's saying that low interest rates, low return on your money, so perhaps put your money into something that is more physical.
And also, the low interest rate environment is a symptom of the financial difficulty that the world is in. And I think as long as you have a capitalist system where the financial system is very, very creaky and people have got a lot of concerns still, the demand for an alternative store of value will always be there. Mm-hmm. And gold has been that store of value for time immemorial.
Are you able to keep up with the demand? Is the demand there? I mean, what trends have you seen in demand when it comes to gold coins?
Well, absolutely. There's certainly an increased demand. I think the turning point was in probably 2007 when we had the blowout in the financial markets. And I think ever since then, more and more people are investing in gold. But of course, it's not just a one-off, it's an ongoing idea to purchase. In fact, many asset managers today are saying that gold should form part of your portfolio. So I think all told, more and more people are acknowledging that with the uncertainty in the financial markets, that you should be invested in gold. 10 years ago, gold as an asset class was off the table. Today, gold as an asset class is back on the table. So I think, as Garth said, there's so many people out there who don't own gold. If you can get every man, 1 ounce, every person in the world to own 1 gold coin, that could be a huge demand, and the price can go to, who knows, $5,000 or $10,000 an ounce. So I think with the uncertainty in the world, gold's position is firmly entrenched for the moment, especially with a low interest rate in America.
Uncertainty